You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome along. If you're tuning in, you probably feel it too. The crypto world just doesn't slow down, does it? Always moving, always shifting.
It really is relentless.
So today we're jumping into some of the really key moments from the recent past. We're talking regulation, court cases, new tech, market surprises, the works. We've gathered quite a bit of info.
Yeah, and the goal really is to try and cut through some of that noise. What actually matters here for understanding where decentralized finance is going and, what does it mean for you trying to make sense of it all?
Okay, let's kick off with regulation. Big news from the SEC. They've basically given a nod to liquid staking receipt tokens, saying they're not securities if it's just like simple admin stuff underneath. That feels pretty significant.
No, it's huge because think about what that unlocks. Institutional money. Suddenly, big players can chase those staking yields, 5, maybe 15%, without locking up their assets completely.
Right, liquidity is key for them.
Exactly. Game changer for how they manage their treasuries. And you see it already, right? Ethereum liquid restaking, it's shot up to, $24 billion TVL, total value locked. That barrier is just gone.
Okay, so from clear rules to courtroom ambiguity, the Tornado Cash developer, Roman Storm, that verdict got everyone talking. Guilty of running an unlicensed money-transmitting business, but interestingly, acquitted on the sanctions violations part. It's a bit mixed, isn't it?
It really is. I mean, it sort of draws a line saying, even with decentralized tools, if they can be used illicitly, well, developers might bear some responsibility.
But the acquitter matters, too.
It does. It highlights that really tricky legal tightrope, especially for open source privacy tools. His defense was, hey, it's decentralized. I don't control it after launch.
Which leaves that big question hanging, right? Who is responsible in a truly decentralized system?
Precisely. Still wrestling with that one.
Okay, let's shift focus a bit. Where's the innovation? Where's the money really moving? Balaji's ideas on tokenized IPOs caught my eye.
Yeah. His argument is fascinating. He's saying when regulators block big tech acquisitions like Figma,
Right.
it forces these startups to scale on their own, which can create enormous value independently.
And he connects this to crypto.
Yeah. He asks, could crypto-native markets offer an easier path for IPOs? Maybe reverse the decline we've seen in U.S. listings, cut through some of that red tape that often helps the big guys stay big.
So potentially crypto exchanges replacing traditional stock markets down the line. That's a bold vision.
It is a fundamental rethink of capital raising.
And speaking of new ways to manage capital, the yield opportunities just keep getting more creative. Take Axal.
The stablecoin savings account.
Yeah, leveraging DeFi positions, apparently aiming for 6–10% yield, just automatically managing funds. Pretty neat.
It's clean, but then you have the wilder side, right? The HYPE yields.
Oh, yeah. Some crazy numbers there. Leveraged farming on sentiment, someone mentioned potentially, like 82.5% APR looped. That sounds intense.
It is intense, requires real expertise. Even the more sophisticated delta-neutral strategies trying to stay market neutral are pulling in 15–26% net.
These are definitely not your standard bank accounts.
Not even close. And the range is just amazing, from these curated platforms like Axal to these super complex farming. And it's not just, crypto natives anymore.
You mean institutions are looking at this too?
Absolutely. MEI Pharma, they're NASDAQ listed, just grabbed $100 million in Litecoin for their treasury. Think about that.
Wow.
And firms holding Ethereum and Treasury are being seen as potentially more attractive than even the U.S. spot ETH ETFs because they can stake it, access DeFi yield.
That makes sense. More utility.
Right. And get this, Tom Lee's apparently accumulating ETH way faster than Michael Saylor did with Bitcoin, like 12 times the pace, aiming for 5% of the entire ETH supply by 2026.
Okay, that is serious conviction.
Yeah.
But it's not all smooth sailing, right? The tech still has hiccups.
Yeah.
Base chain have that outage.
Yeah, nearly 2 years of solid uptime, then bam, 33 minutes of no blocks. Apparently a sequencer handoff issue.
Just a brief pause, but it's a reminder these systems are still evolving, still fragile sometimes.
For sure. Even small outages, they just highlight how crucial robust infrastructure is, especially as things scale up.
But on the flip side, there are projects trying to build more resilience, more trust, like Hyperliquid tackling the extraction meta.
Yeah, that's their term for, projects launching tokens, founders dumping, eroding confidence, the stuff that gives crypto a bad name sometimes.
So what's Hyperliquid doing differently? It sounds really interesting.
Well, they don't have private investors, no VCs in the background dictating terms. They fund continuous token buybacks using an assistance fund fed by real protocol revenue.
Buybacks funded by actual earnings.
Exactly. Their goal, they say, is to repurchase their entire circulating supply in less than 4 years. It's all about aligning incentives through, like, transparent commitment of risk capital and real economic activity.
That's a really different model, built on revenue, not just hype.
Yeah, it really is.
Yeah.
And it begs the question, right? Can models like this actually restore some foundational trust? Can they position themselves as credible, long-term stores of value, unlike so many projects that just feel extractive?
The genuine counter-narrative, definitely something to keep an eye on.
For sure.
So wrapping up, from court decisions and SEC nods to wild yields, institutional shifts, and these efforts to build trust differently. It's just constant motion.
Never a dull moment.
It really keeps you on your toes. This whole landscape is just fascinating to watch unfold.
Absolutely. And for you listening, what's the takeaway? Well, the pace is fast, no doubt. But looking at these specific moments, the regulatory moves, the tech advances, the trust experiments, helps you see the bigger picture.
Yeah, the underlying forces.
Exactly. So maybe the question to ponder is, in this world always chasing the next shiny object, what really makes for lasting value? What builds real trust in these decentralized systems? Something to think about.
Spoken Tech for your ears.